Hey everybody, what's going on? Wow, Avenger, and it is Avenger, it's not Avenger. I know that because I listened to the conference call that they had, and now I sound super smart by calling it the correct name. But what a run! This thing has just been on an absolute tear, and I want to get a video out there for some people to think about some stuff over the weekend as to where we think that this is going. And this has just been a hot runner. It's got a device that's looking to get approved by the FDA. Could be any day now, and they are looking to announce those results at any day, and therefore a lot of people are piling in anticipation of it. I'm going to get to Avenger in a minute. I know everybody came here because of Avenger, but I want to walk you through a trade that I had with Amarin right now because it's a very similar type situation. Okay, stay with me on this. I'm not going to be wasting your time here. I promise it. Let's walk through Amarin, and I think things are going to become very clear as to what potential this thing has right now. And again, this is just going to be chart analysis on this, letting the charts tell us a story as to where we think it's going to go. And not because that's just what we think, but that's what things are telling us from a technical perspective. So I got involved with Amarin because of this. So I like using Fibonacci. If you don't know what Fibonacci is, there are lots of good videos over on YouTube about it. And I'm just going to go through really quickly some measurements. Fibonacci is just a mathematical computation that there's some numbers in our world that nobody knows exactly why they happen, but they just do. And Fibonacci plays with that. And if we go from our swing low to our swing high right here, I'm measuring this first leg right here. You can see that we get what's called a 382 retracement. 382 retracement is one of our two main Fibonacci numbers. The first main Fibonacci number being a 382, the second one being a 618 retracement. The 618 is commonly referred to as the golden mean. But a 382 retracement right here, in my mind, signals what's typically is going to be called trend continuation. So we get this first leg right here. I'm just going to draw a line right here from the lowest low to the highest high of this leg, and the retracement of this leg right here is going to be 382 retracement. And like I said, that tends to indicate trend continuation if you get a turnaround at the 382. So the thing that really clued me in on this was if I go ahead and I take this high right here, and I'm actually going to go to the highest closed candle, which is going to be right here. Now what happened, let's just leave it like that, that's fine. So what happened is it did turn around here at the 382, and then it broke above and closed above. So at first it hit resistance right here, right at that about 1877 mark or so. Hit resistance, pulled back right down to the 382, came back up, got kind of close around here, got rejected again until it came up and it broke above and closed above. I like looking at a daily chart just to get an overall view as to what's going on with the chart. But for any kind of true technical analysis and where I price my entries and targets and everything, I like using the 1 hour and 4 hour. In this situation, just for analysis, I'm going to drop it to a 4 hour. And you can see right here, now every bar is going to count for 4 hours worth of trading. Big move with volume right up here, broke above, closed above this most recent high, correct? Okay. Now what do we notice right here? There's a pullback back into structure right here. So what used to be structure support is now, or it used to be resistance, is now becoming support. That's just how markets move. That's just basic. Okay. Now at this point in time, I know from this candle right here breaking above and closing above, right there, that candle right there, that has already signaled that it wants higher. This pullback right here doesn't concern me, but it did for the period of time because I wanted to get involved in this trade. It broke above, closed above. It's already signaled higher. Okay, now we're looking at pulling back. So what I'd like to do is drop it to a 1 hour. And then I'm looking for what's called a higher high, higher close candle. That's going to be my entry. And I'm going to get rid of that so it doesn't confuse anybody. So that's my lowest close right here. Now I'm looking for a higher close candle. So this is a high of 1958. I'm looking for a green candle to come into the picture that closes above 1958. Did not get it here. That closed at 1935. Did not get it here. That closed at 1949. 1960 right here. So that's a high of 1958. This candle closed at 1960. I think that came in almost at the close. I did make a purchase right there. The nice thing about that is that I can actually put a stop right below that lowest low right there. That's my stop right there if I'm going to enter on my highest high, higher close candle right there. So now the question becomes, well, okay, well, where do I think this is going to come to? And this is actually, my target points are something that I actually did before I got involved with this trade. But I know that I made my purchase right there, and I know that my stop can go right there. If I go back to a 4-hour, that first leg that I drew right here, this is called, I'm going to label it right here. This is called my A point. And this is my B point. Okay. Now what I'm going to do is anticipate a CD leg coming into the picture. So this is my lowest low right here of that retracement, right at the 382 before it turned around. Okay. So now I'm going to clone this leg right here, make an exact copy of it, and I'm going to move it over until it gets to that lowest low candle right here, which is going to be about right there. And what I'm saying with this methodology, you can see where I'm going with this, is AB equals CD. This is what's called a measured move. Okay? And that is my methodology behind that. This break above, close above right here, this pullback, I think that the termination point right here is going to be at about D point completion right here. And I had a sell, I sold it, I think it was 22.56. 22.72 was the end point on that. I peeled off a little bit early because I had another play that I want to get involved with. But you can see, look what happened. It came right up to the end of that move, terminated there, and then dropped off. Okay. Another thing that I can use to help build a case that for me to say that yes, that is going to terminate right there as far as that move is concerned, I can use what's called a Fibonacci extension, and I can measure the A to B move. Lowest low to the highest high of B, and then back on into A, and look where that move just about terminated right there, right inside this area right here. Okay, where's that tool? Right here. Right inside that area right there. Okay, that's where I'm expecting a turnaround. It went right up to that 1618. A mathematical computation, has nothing to do with anybody's psychology or anything like that. Total mathematical computation came right up on the 1618 and then has dropped off since. Okay, so I have an idea. I know when I entered that trade, which is actually right here, it's hard to see it right here. I know when I entered that trade, it was at 1960, I think it was 1960, and then I know my stop had to go right here, and then I knew that my reward was going to be about this much. So I knew I had about a 3.83 to 1 risk to reward ratio. I knew I was risking 4% to the downside to gain almost 16% to the upside. Phenomenal risk reward, knowing ahead of time that the market already signaled to the upside and then was pulling back. I'm going somewhere with this. I know, dude, get on to AVGR. I get it, okay? I will get there, but just understand that people's psychology, because that's all that a stock chart is just a display of people's psychological decisions that they have made, and people like to make the same decisions over and over and over again. We'll get into AVGR here in just a second. And this trade worked out beautifully, okay? Now with AVGR, take a look at this. Let's start off with just a bare chart going at the daily. Are you seeing anything interesting as far as that's concerned? Let's start drawing it in if you don't see it just yet. I'm going to go ahead and go to my Fibonacci retracement. Lowest point of my leg right here. Highest point right here. Remember this day right here when everybody had to check their shorts and a little nerve-wracking right there, right? Look what happened right here. What did we get? We got a 382 retracement. 382 retracement tends to indicate what? Trend continuation. Okay? Let's draw in a line at our highest close right here. That's my highest close candle right here. Highest close right there. Let's drop it to a 4-hour so we can see it a little bit better. Are you seeing what I'm seeing? Let's adjust it just a little bit so we change time frames. Are you seeing it yet? A break above, close above this high right here. We didn't get the pullback. Things got way too hot. It traded almost 7.4 million in volume just in that first 4 hours today. People weren't interested in a pullback. They just want to keep running this thing straight north. So we didn't get the pullback. But most importantly, the break above, close above right there. So how do we figure out where this thing may go? Do the exact same thing. Trend line from the lowest low to the highest high of this move. That's my AB move, right? Now I clone it. Put it in right there, right at the bottom of my 382. Doesn't matter how long it was there, I touched the 382. That's good enough from a technical analysis standpoint. Now look where we're coming in at. Let's draw a line right here. The very top comes in at about 102. What do we know about even-handled numbers, especially around that dollar mark? People love that dollar mark. I laugh every time I see somebody make a post saying, "Oh, we're getting close to that dollar. All I need is a buck. Here it comes." Because people love making decisions at that moment in time, at that dollar mark, at those even-handled, $1, $1.50, $1.25. Our brains love even-handled numbers. Okay, and like I said before, all that a chart is a graphical representation of the psychological decisions that people have made. That's what drives a market: fear and greed, right? And you might be saying, "Hey, no, that's not true," because we have machines that are out there making trades for everybody. And that's fine. My reply to that would be, well, who programs the machines? They're not programming themselves, they're programmed by people, right? So psychology still plays a role, even though we're talking about proprietary trading or computer trading, that sort of thing. Here's something else that might be a little bit mind-blowing. Let's draw a Fibonacci extension here. Lowest low to the highest high. Back on in. Look where that 1618 starts coming in at. Right around that area. Same exact thing that we saw with Amarin. I went round and round this one dude on Twitter one time, which I don't do anymore. It's just a waste of time. Oh, this is biotech. Biotech is different. It's different. Is it really? If it's so different, why are we having all these turnarounds with these trend continuation trades right at the 382? It's a beautiful place to enter right there. So it's not different because people's psychology does not change. We make the same decisions over and over based off of fear and greed. So we're coming right into that gap right there, right at those lows, somewhere within that green box that I just drew is probably going to be the end. Are we going to get there before FDA? Boy, as the way things are clipping along, I mean, that could be a possibility. If it does get there before FDA and then the thing gets approved, maybe we're going to see a sell on the news. Maybe at that point in time, Dow theory, which one of the tenets of Dow theory is that the market discounts all information. Maybe it's already, quote, priced in. We've heard that before. The market's already priced in the approval. So we might see a sell-off after something like that if we get up into that range before FDA. I don't see any reason at all, especially closing at the high of the day on the kind of volume that we had. Just looking at it from a daily perspective, I don't see anything stopping it until we start getting into this range right here. And that's matching up with that box right there. And that's, again, right around that dollar mark. And could it continue beyond that? Sure, it could. I mean, we could start getting up into the 165s or something like that. It could. But in terms of probability and when to get out and that sort of thing and planning ahead, and you're building a very strong case to exit around that area based off of some very solid technical analysis. Markets have a language. Markets have a rhythm. You just got to be able to learn how to read the language that the chart's telling you. And thanks for sticking with me if you made it this far past the Amarin recap. But you can see why I did that. When we got down to that 382 retracement right there, that was painful to watch. And to be honest with you, I would usually have a stop right around there. But I didn't with this one because my trade plan with this one from beginning was to hold through FDA because I think it's going to be positive. But once we got that 382, I put a post up there. I said, hey, if we break this 69-cent area, be on the lookout to close in on that $1.02 range. That's exactly what's happening. Candles don't get much more bullish than that. So everybody who is holding right now or looking to get in should be very excited about this move. I think it's got some more juice in it, and we'll see exactly how far. But I think maybe another 14, 15% until we get to that 102 range. And then we'll just have to see what happens at that point in time. One other thing, too, is getting long on this pullback right here, that higher high, higher close, right? So if we wanted to get long on this pullback, we're looking at the pullback. I look for my lowest close candle. I've got to have a green candle that closes above that candle. Didn't happen there. That's my lowest close candle. Got to wait for a candle to come around that closes above it. It looks like it's going to be that one right there. 62.05 is the close. The high on this one was 61.49. That would have been my purchase. A stop would have had to go below this swing low right here. So if I get in right here, my risk to the downside is about 23.5%. That's pretty steep, obviously. But if we are looking for our potential reward with that, got to bump it to a 4-hour to do this right. About the 102 range, right? Our risk about that, or potential gain at that point in time, would have been about 65% to the upside. So we're looking at about a 2 3/4 risk to reward ratio, 23% to the downside, 65% to the upside. Position sizing would be key with something like this because you do have significant downside risk. But what would have happened if we got in on that 1 hour, or on the 1 hour time frame, on the higher high, higher close? If you put the stop loss right down here, you would have purchased right here, and your purchase again would have been at 62.05. We're at 89 right now. You didn't get anywhere close other than that point right now of getting stopped out. It would have worked. You would not have been stopped out. It would have been a perfect time to get involved on that pullback, which is a tactic that I love getting involved with trade and continuations. It's that higher high, higher close on the pullback. And that's where we're at right now. So again, great things ahead. Thanks for watching this video. I appreciate it. If you like what you see, send me a message, send me a like. If you don't like it, tell me that too. That's fine. I'm all about a different perspective, but lots of reasons to be excited about AVGR, and RARX is the other one that I'm involved in right now. Very similar situation as far as the setup is concerned with that right here. I mean, again, the repetition involved with this. Look at this. I'm going to clear this out so we can see it. Look at this move right here. This is on the 4-hour chart. Lowest low to the highest high. What do we get? We get a turnaround right at the 382, right? And now what do we get? We get a break above, close above structure right here. Take it to a 1 hour. A break above right there, looking for the lowest close candle on this pullback. Lowest close candle after the pullback would be, looks like it's that one right there. Closed at 24.94. Actually, you know what? This is when I got involved. I got involved right here, and I was underwater a little bit because my stop went right here. So I got in at about 25.75, I think is what I got in at. Pulled back a little bit, and then we're just moving in the right direction at 27.22. Same exact methodology with this. Same exact type setup. I could draw in the AB equals CD, but I think we all get it at this point in time. But you can see how things just repeat themselves over and over and over again. All you got to do is go out and find the hot stocks that are trending and apply this trend continuation method. Look for the pullback, higher high, higher close on the 1 hour, get involved, place a stop, and hope for the best. And more often than not, you will be right. So that's about it. Again, best of luck, happy trading, and I'll talk to you guys soon.